host, Ryan Miller, and for the past 15 years, I've helped hundreds of people to raise millions of dollars for their funds and for their startups. If you're serious about raising money, launching your business, or taking your life to the next level, this show will give you the answers so that you too can enjoy your pursuit of making billions. Let's get into it. In this week's episode, I bring on my dear friend Jeff Sekinger. Jeff is the founder and CEO of 0%.com and Orca Capital. Join Jeff and me as he discusses his crypto fund and how he scaled it from nothing into one of the hottest crypto funds on the planet. You don't want to miss it. Plus, you're going to want to listen all the way to the end when Jeff finally opens up and tells our fans around the world the 4 key pillars he uses to make insane profits in the hottest crypto space, bringing us all just a little closer to our dream of making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have one of my dear friends, Jeff Sekinger. Jeff is the founder and CEO of Orca Capital as well as 0%.com. This guy runs a massive crypto fund as well as a crypto and finance education company that helps people around the world to achieve financial freedom. So what this means is Jeff is a clear leader in all things crypto and financial mastery. We're going to bring him on the show. He's going to talk about crypto and all these awesome things that he's got going on, how he's changing people's lives around the world. This guy, you're going to want to tune in here. This guy has a jam-packed episode. He's going to give us all the secret tips. Maybe not all of them, but some of them we'll push him. We'll see what I can get out of him. But Jeff Sekinger, welcome to the show, man.
Thank you, Ryan. Very honored to be here. I know a lot of your guests are super talented as you are, so really appreciate it having me on today.
Thanks a lot, Jeff. Yeah, and it's certainly an honor. You're very kind. It's an honor to have you. It's someone of your caliber and social media following, and you're on stage. I mean, man, you're doing a lot of stuff. I've been a huge fan for a very long time, so I can't tell you how excited I am to have you on the show. It is certainly my privilege to bring you on here. Now, before we get into all the cool stuff that you're doing right now, and it is cool, you're going to want to hang in the end when Jeff reveals everything that he's going to tell us. But right now, maybe you can walk us through, like, how did it start for you? I mean, how did you even get into this? How did you become like this world-known expert on crypto? Walk us through where it started.
Yeah, so I would say, originally it actually started back in 2013. I bought Bitcoin when it was $130 and didn't know what it would turn into, what it is today. So I actually bought it in 2013, sold it in 2014, went the whole traditional finance route after college. I, got my finance degree, worked for one of the largest banks in the US in asset management. And that was back in, very early, I guess that was 2016. And then when 2017 came around and Bitcoin went from, 1,100 to 20 grand, I started to do a lot more research into, hey, what is this entire asset class? Not just, Bitcoin and Ethereum, but what is the actual blockchain and technology behind it that could potentially revolutionize business and make this a respectable asset class? And I realized that this is something much more than just a fad and a trend that was likely to be here long term. So I ended up leaving there in 2018. And then started my fund in 2019. And the reason why we grew so quickly is primarily because of, my personal brand. I put a lot of time, energy, and effort into teaching finance, primarily through Instagram. Now I'm on Twitter, YouTube, Instagram, pretty much every social media platform. But, it actually, to go back to my original story of why I even got involved in crypto, why I came down the rabbit hole of, credit, and that turned into my financial coaching company called 0%.com, is because I've turned a lot of problems into my purposes in life. So I actually, in high school, I got injured in high school football. I was chasing one of the best receivers on our team. I tripped over his legs, put my hand out on the ground, and then my hand hit the ground, and it kind of stretched my body, and it tore all the muscles in my ribs. And I couldn't walk or breathe or do anything without a lot of pain. So the doctors put me actually on opiate medication, and that caused a 6-year problem through all the way, from the end of high school all the way through college. I was, trying to get help from doctors. They were putting me on different things that made it even worse. And I just found myself in a really dark place, in a lot of debt, was pretty hopeless, helpless. I lost a lot of weight. I still got good grades somehow. I think I graduated in the low, 3.3, 3.4 in finance. and then worked for, I thought I got my dream job. I got there and realized, hey, this is a great gig to get out of, out of high or a college, but it's not the long-term thing. And I finally got to a point where I got so sick of like my current lifestyle, my health, the hole that I dug myself into. I actually went into rehab and used that as a place to reset and rethink about everything in life. So once I got out of there, I realized that part of the reason why I carried on that issue in life is, obviously it was something that snowballed and there was multiple reasons why, but primarily I was using it as a way to escape my reality. So I'm like, hey, if I want to finally create a really cool life and get healthy, I need to create a really great reality. And that comes from me doing things that I value, things that I want to do in life. I valued freedom, options, and choices. I valued uncapped earning potential. I was always a very unconventional guy, and crypto really fit into that vibe that I had my whole life. I always liked underdogs for some reason, and crypto is definitely the underdog. So it just really fit all in. I ended up starting a marketing company when I got out of rehab and went back into the corporate world, and then use that as a thing to jumpstart my career outside of the corporate world. And then I had terrible credit from the entire thing that I just went through, and just started to like teach everyone about, hey, what am I doing for my own credit? How am I, leveling up my finances? Because I was in a hole and I dug myself out of a hole very quickly. Honestly, it was in about a 9-month period. I was able to turn things around as far as my credit score from a 524 to a 793. And that just, I started to share everything. And then everyone was just asking me questions from there. And then it just rolled into, a 40 plus employee company, and, now multiple hedge funds under one management company that have done quite well over the past 3 years. So been a pretty crazy last 4.5 years, and super, super happy to be here.
Wow, that's absolutely incredible. So you worked on a couple of things. So you stood up, you went through that entrepreneur journey, you got your butt kicked a little bit, you moved around. You even, through a lot of those prescription things that the doctors gave you to manage your injury. And then that kind of locked you down and took a grip. And then you found your way out of that. You found your way out of debt. I mean, man, the things that you've overcome to accomplish what you've accomplished is absolutely so impressive, man. Like, again, that just reaffirms why I'm already a huge fan of yours. So, and so when you started, let's crystallize a little bit of everything that you created. So you talked qualitatively and all these things that you did, and you're on social media and you're helping people to improve credit and level up on their finances while you're doing the same. And so where now that evolved into what we introduced earlier, which was 0%.com. Maybe walk us through a little bit about kind of those 3 pillars that you teach in that sector, and maybe some of the benefits people get out of your courses.
Yeah, so I'm a firm believer that credit is really your foundation, especially here in the U.S. I know you Canadians are pretty close to how we do it over in the U.S. too, but people outside of the U.S. and Canada, it's not as detrimental as and it's just a lot different the way that the scoring goes. But in the U.S., it is so important to have good credit. I can't even tell you the amount of reasons why. If you want to get an apartment, you want to get a car, you want to go travel for free, and do the whole points hacking system. You want to start a business, really anything that, even jobs. Some jobs are checking your credit now. So it's super important to have good credit. So when I got out, I'm like, why am I still in a career that I don't really see myself in long term? And I realized that it was because of my finances. So then I'm like, okay, and this whole financial picture, what do I focus on? My credit. Okay, great. I repaired that. I ended up funding a business, moving high interest debt over to 0% debt. Started to use that to scale a marketing company. Marketing company generated income. Then I started to get into investments, and that rolled into 3 different things, which you mentioned. So at 0%.com, we're a financial consulting and education company. We help entrepreneurs get access to low interest capital. So we'll help them, typically, even if it's a brand new LLC, we can help them in 30 to 90 days get access to 50 to 250 grand of 0% interest business credit, so they can invest that in their business, make investments, do whatever they see fit with that capital. So that's always been the foundation of that company, because we believe that if we can give them, the resources that they need to go make their dreams happen, that's really, really impactful. And we do, over $10 million a quarter in funding now. So it's scaled pretty quickly on that end. We also have on the investment side, very passionate about investments, always have been. So we have a real estate division where we have different coaching programs inside of that division, and then all the cryptocurrency education as well, which I focus. That's pretty much the only thing I focus my time on now is that division, and that's obviously a rapidly growing space. I know we're going to get into it today, but yeah, those are the three things we focus on. Hey, let's get capital for people to make the things and dreams that they want to make happen in life, and then let's if they do well in their business, they can learn to, number one, invest on their own in real estate or crypto. We believe those are the best asset classes for multiple reasons. And then we also have like funds above that if they get value from our communities, our programs, our knowledge, they don't want to invest on their own, we have funds for them to be able to invest into as well.
Brilliant. So when it comes down to, so you built 0%, you have all these programs that people can learn and kind of grow their own business. And you mentioned investments. Now, a big part of investment, whether you're, as we say, a funder or a founder, is raising capital. And I understand that your early days of raising capital, you had some, you just hit it hard, man. Like there was no sneaky trick other than you worked your tail off and you banged your head against that brick wall and eventually something broke. Maybe you can walk us through a little bit take us back to those times when you were raising capital, and just walk us through that initial, I guess, liftoff that you achieved.
Yeah, so I think it goes back to my mentality. So I'm an all-in type of guy. I got the full send mentality. When I want to do something, I got to go all in on that thing. Mm-hmm. So when I kick into gear and realize that this is something I really want to do, that becomes a very, very strong focus of mine. So when we first started the funds, we originally started our first fund in April of 2019 as a place for us to invest together. When I say us, I've got one other general partner that I've known since middle school. He's been a trader for over a decade, very successful trading his whole career. So I'm like, hey, let's, you and I are talking about crypto every day. Let's start a fund so that, number one, we can legally invest together. And let's try to prove a track record in 2019. If we do well, we'll start to raise money in 2020. So we put some money together. This is right when I started to make a decent amount of money. I was able to I'll pretty much go all into my fund. And then in 2019, we proved the concept, we proved the numbers. 2020, we officially started raising money. And I did over 600 sales calls over the past, 3 years, actually probably 2.5 years now. So, we have over 230 limited partners now across, multiple funds under one management company. That have all different strategies. But, I think one of the things that helped me the most, and I know there's probably a lot of people on here, they obviously, make investments or they run a fund, is, the whole quote that I mentioned to you earlier, Ryan, if they don't know you, they can't flow you. So
yes.
One of the, some of the best operators in the world, they've got this great product. They've got this great, investment thesis. They've got the operation side figured out. The problem is they don't have anyone that knows them. So you got to get known, because if you're not known, there's no way for people to come invest with you and do business. So that's I'm a huge firm believer in hey, just try to get as many people on earth to know who you are. I'm not in the game of trying to make people like me. I want to be as transparent, open, and honest, be 100% who I am, but focus on, hey, let's see how many people can get to know who Jeff is, and then let them make the decision from there. So I went all in on creating content. And then what it really helped was, I would create content, and how we kind of structure things. And I didn't even plan it this way. It just worked out this way. Is a lot of our clients that we build rapport with through the education consulting company end up becoming investors in our funds, because we've built a relationship, right? They've been a part of our community. They've gotten value from us. They trust us. They then see other people in the communities getting results with us. Then they're like, okay, well, I have extra money and I want exposure to this asset class. Let me go talk to them. So it just naturally worked that way. And I would say, if you are the type of person that's open to branding yourself like Ryan's done an excellent job in a very short amount of time. If you can do something even 1/10 of the ability that Ryan's had, you're probably going to do very, very well. In, it's going to help you raise money so much more because you've built that rapport. There's a thing in high ticket, anyone that spends over 10 grand, they have to spend at least like 7 hours getting to know you to spend that 10 grand with you. I really think that's there's probably a very similar statistic in the fund capital world. So the more that you can like get people to know who you are, whether that's through free content, maybe you have a newsletter, maybe you have, videos online, it's going to help so much. So I think that was one of the things that allowed us to scale over, 200 LPs in a pretty short amount of time.
Wow, that's phenomenal, Jeff, and thank you. You're very kind. And you really bring up something that's quite interesting. We talk a lot about this. Is from my own philosophy and experience over 15 years of doing this. A lot of people ask me all the time. Probably the question I get asked the most is, how'd you raise all that money? And something even in my own career path, one thing I've learned is I teach them how I raised money when I was at their phase. But really what it always comes down to, I do it a little bit different now for different investments that I'm involved in. But the thing, and you touched on this is something at the core belief that we have, is I call it R&R. So on this show, and anyone that asks my advice on how to raise money, I'll say it comes down to the two most valuable assets in your possession, R&R, which is your reputation and your relationships, right? So if they don't know you, they can't flow you. I love that. I might use that every once in a while, but everybody knows it's Jeff Sekinger where it came from. So you can keep me honest on that. But through your reputation and relationships, if you optimize those, and there's never really a distinct moment or observable moment, but all of a sudden, somewhere in your career, money and deals will start to come to you. And that's what a solid reputation and relationships, or in other words, once they know you, they start to flow you. That's where R&R starts to come in. So, whether you're a funder or a founder, you're going to have marketing plans, you're going to have fundraising plans, you're going to have product development plans. But my advice to you, if I could echo just in different terms of what Jeff's saying, is also have a plan to manage your reputation and your relationships. You do that and things start to come to you. Would you say that's a fair compliment to what you said?
Yeah, so true. I mean, every action that you do, whether you consciously or unconsciously are aware of it, is either building or tearing down your reputational currency. Yeah. So the number one thing you should be focused on is keeping that reputational currency increasing in value. So I 100% agree. And especially not just in every business, but especially the fund capital raising type of business, because you're typically dealing with a fair amount of money.
That's right. And I sort of joke with people who, ask for my unqualified advice, we'll say, but for people that ask, I'm just like, look, you want to stand out, be known for being honest. Like, Trust me, that will go really far in the finance world, where they're like, I just want to do business because I know I can trust this person. Now, maybe someone will give an extra point or two on my returns, but I don't know them. I'm not going to flow them. But I know Ryan, I know Jeff. I would finance those guys because I know they would bend over backwards to keep their commitments, right? So you do that, man. I mean, you're halfway there.
Yep. And I would say, just to finish off, round that comment, is I was super worried about my whole story. So, I spent like 2 years thinking about, should I share this? Should I not? And I'm like, it's been such a big part of my life and such a big reason of why I'm where I'm at. I think I would be selfish for me to not share my story, because it provides a lot of inspiration to other people to also have positive change. But I was so worried about it negatively affecting my business, when actually it did the exact inverse of that. It brought us more money, because people were like, dude, I just trust you. I know your story. You're a hustler. You're going to make it happen. I want to bet on you because I feel like I know you. And that was such I did not expect that to positively impact. I was really worried before that the people just weren't going to like me because of that. And it's so true, Ryan. And the more you can be open and honest and show that you have integrity and transparency, it's going to allow you to raise money so much easier.
Yeah, that's absolutely right. And you remind me of a saying that I constantly have to remind myself is don't try to be invincible, be unstoppable. See, the person that is focused on trying to be invincible is not sharing that. They're not being vulnerable. They're not showing their softer sides of their humanity.
Mm,
And because they're trying to appear to be invincible, infallible, all these things that is an unrealistic standard. In fact, that's trying to be perfect, which is the lowest standard. But people who say, well, I can't say that I'm invincible, but I can promise you that I will be unstoppable. And this is something for our fans listening around the world. This is something that Jeff Sekinger is illustrating. If you're picking this up, is he's saying, like, when I stop trying to be invincible and I just decided to go all in and be unstoppable, that's when the magic happened, and things really, really took off. So, I absolutely love that. And I could tell people really responded. And I think you said you were like, you were so successful in your fundraising. It was like for like a month or two, you were onboarding like one new investor every single day for like a month or two. Is that right?
yeah. Yeah. It was probably like two months in a row. Yeah. I mean, it was insane how quickly we were growing. So, because like
Wow.
after you start performing, as long as you do what you say you're going to do, that's another thing. Be transparent on any call that you have with investors. Like if it's
Absolutely.
a fund you're setting up for a 10-year return, like make sure that they know that, not to expect something in 1 year. So
Mhm.
we were just really transparent, so people saw that we did what we said we were going to do, and just referred us a lot of business. So yeah, we just saw the snowball effect taking place. So that was a crazy few months.
Yeah, that's incredible. And so you're onboarding all these people, you're on stage, you're marketing, your finances are turning around, your life is going good, you're shifting from being invincible to being unstoppable. And that's only more and more apparent every time I talk to you, Jeff. So at that current state, or close to it, how when you start to succeed, I mean, what do you do? Do you have like when things take off, you have phenomenal quarter, you have wonderful results. I know you're a 506c, so you're allowed to publish these things. Like, how do you share your good news? Should you share your good news, whether you're a funder or founder? I mean, how does that work in your world?
Yeah, I think people in general are just attracted to people that are optimistic and successful. So I
Hmm.
think it's really important after you start to have success, as long as you legally can, is sharing your success. So
Hmm.
sharing, developments, whether maybe, hey, we're hiring a new CFO, like, anything that's expansionary, sharing returns if you're able to do that, sharing operational changes that you're making to make the fund even better, sharing any type of success that allows you to show other investors that, hey, you are still growing, doing well, no matter the economic climate, and just being able to share some type of success helps a ton. And I would also say too, is like some of your LPs that you performed for, I think it's really important to ask them, hey, who else do you know that's like you that would get value from something like what we do? And then just opening up to like referrals, because a lot of the times it's just that really simple question that could give you dozens and dozens of really highly qualified leads, instead of just trying to do the guerrilla marketing tactics. The warmer the investor can be, especially when it's from a warm referral with them not even getting compensated for the referral, it's coming from them actually wanting to benefit other people that they're close to because you have a good product. So I would say that's really important. And also sharing results. Ultimately people invest for the results, so sharing the results, but also showing that you're a heavy focus on operations as well.
Hmm.
I think it's really important to share any like big developments that you've got, not speaking about real estate, just speaking about the overall, like you're hiring, you're building out an algo strategy, you've got a mean reversion strategy that you're rolling out. It's things that show that you're working on bettering the product even more than it is. Just shows that you're focused on the right things, because a lot of people can be good at sales and marketing, but the unfortunate part is if you can't deliver on the back end, then that's where you tank your reputation. So it's really important to make sure that you do have the operation set up so that you can handle the growth.
Yeah, I love that. And what you just said reminds me of if a very classic saying from Y Combinator. Many people on this show know who they are. And they said, yeah, like the dynamic duo between co-founders is one builds, one sells. So what you're saying is like, well, it's not enough to be good at just one. You need a builder and you need a salesperson. And so when you have both, yeah, you might be onto something. Just like Jeff and his empire that he's building too. So so rounding third base here, I'm just curious. We promised that you'd give some of those tips, those tasty tips that you found from being successful in running a fund and crypto investments specifically. What are some of you mentioned you had about 4 takeaways that can kind of peel back the curtain, bring some of our listeners into your world of how you assess crypto investments. Maybe walk us through some of the things that you look for when you're trying to decide, should I invest in this crypto deal?
Yeah, totally. And I would say too, just for all fund managers, this really helped us, which is going to help you even if you're a crypto fund manager or not, is investing in your own fund. I did want to highlight that piece. Really important, because if you show that you have your own skin in the game, like myself and the other GP are always the top 4 largest investors in all the funds that we've ever started. So we can say, hey, we believe in our product so much that we are not just the GP, we're an LP in our fund as well, which means we're investing pretty much the same way that you are. So that's going to help you immensely too, to show that you've got conviction in your own product. As far as what we look for, crypto can be really quite confusing. Let me paint this quick picture for everyone that this is something that came out of nowhere, right? It's very rare that we see an asset class just rise out of nowhere in our lifetimes. So we just saw this come out 13 years ago, but all the development as far as the technology and growth and smart contracts, all the crazy things that are happening now have really been in the past, pretty much 2.5 years, but really Ethereum came out, 2015 or so. So they're still all very new inside of a decade, which is understanding that we still have not seen the institutional capital come in. We've seen this space primarily be all retail. And now we're jumping into the regulation actually coming in 2023. We just saw, I don't know if you saw this, Ryan, but NASDAQ launched that one of the largest stock exchanges custody for crypto last week. BlackRock a month and a half ago partnered with Coinbase. We saw Citadel, Schwab, Fidelity partner on a crypto exchange that's launching pretty soon. So we're starting to see it's just like the companies that have tens of millions of users and trillions of dollars come into this space. So the problem, the reason why I wanted to highlight, what'd you say?
Oh, I just said the rise of the empire. Here they come. The big $1 trillion funds are jumping in. So yeah, sorry, go on.
Yeah. So the problem with the space is like, it's been extremely speculative. So there's over 20,000 coins. It's very, very difficult to try to figure out what could potentially be valuable. So one of the things that we really like to focus on, and I'll go into our 4 pillars here in a second too, is understanding that there's a lot of different sectors within crypto. There's layer 1 protocols, there's metaverse, there's play to earn, there's payments, there's a bunch of different DeFi. There's a ton of NFTs. You can go on and on. Okay, we like to try to figure out, how do you value these assets? The problem with tokens that don't have their own blockchain is it's difficult to put some type of value on them. So we like to primarily invest into coins that have their own blockchains, because we can do analysis on those blockchains to be able to understand, hey, is this actually going to be a valuable blockchain? And is it going to create the ecosystem and network effect that we want to see to grow the value of the coin? Because every transaction on these blockchains are using a gas fee. So, and the gas fee is typically paid in the native coin. So the more that we can see the transactions picking up, the more that coin is being used as a gas fee. Also, it's typically used as its native currency inside of that ecosystem. So we like to think about it as like the AWS. Okay, so you can go to AWS, which is Amazon Web Services. You can build, an application on top of AWS. You could host a website. You can do a bunch of different things. Same thing with these layer 1 blockchains. You can go build applications on top of these chains. And that's what we want to see, is like primarily the things that we look for is, hey, what are, number of new wallets coming on? That could be somewhat manipulated, but we want to see a trend in number of new wallets increasing on that, specific blockchain. We also want to see number of active wallets. How many people are actually active using that blockchain and the native wallet on that blockchain? Also, developer activity. So we want to see, where are the developers going? Because if there's not developers, then there's not going to be value creation. So we want to ensure that we're seeing developers going to that layer one blockchain and building decentralized applications, because those applications, if they're great applications, they're going to attract the users. So we want to see an increase in the number of developers and the activity of those developers. Another thing that we'll look for is total value locked, which is, people abbreviate it TVL. You can go to DeFi Llama. That's one of the, places you can actually check the TVL of different protocols, and you can see, the number of capital inside of that chain. So we like to see a high TVL relative to its market cap, because it shows, conviction. Number one, it shows that there was developer activity, because there actually is applications that people are putting capital into. But then it shows a conviction behind, those applications and that chain, because if we see a ton of capital coming in and it has a high TVL, then it just builds more conviction to making that chain potentially be valuable long term. Another thing we'll just look for is the number of apps on the actual network, which can come from obviously the developers. So and then number of transactions too. We want to be able to see, hey, are the number of transactions increasing or decreasing? We like to compare like transactions relative to market cap as well, because we've seen some chains that have like extremely low adoption, low developer activity, low active users, low transactions, but a massive market cap. And it's just because there's a bunch of retail investors that bought into it early on, and they're just, staking it and holding on to it because they like the name of the coin, So in long term, that's probably not a really great investment thesis. But there is some things to, in crypto, and even we saw with stocks, communities are now a big thing you got to consider. Like if we looked at, there's some meme stocks that literally tore down massive funds. Melvin Capital got destroyed from these meme stocks. So now you got to put a little bit of a pulse on, first of all, memes. Secondly, community, and understand you can look at different social trends on these different projects as well. So those are some of the main things that we'll look at in these layer ones, and that's why we like to focus on the layer ones. Some examples are like Ethereum and Solana, Phantom, Avalanche, Polkadot, those types of projects that have their own blockchain. You can go look on Block Explorers and view a lot of that information. So Ryan, does that make sense, or you want me to go anything deeper into that, or jump into the 4 pillars?
No, that's really good. And maybe just a quick primer on the difference, like you said, layer one and all that stuff. Maybe just a high level example for people that are pretty new to this sector. Maybe just say you like layer one protocols. Someone's like, what the heck's a layer one protocol?
Yeah.
Maybe just walk them through the very basic of what exactly that is and how does that fit into the larger picture of blockchain.
Yeah. So layer one just means that you can actually go build on top of that blockchain. So that coin has its own blockchain. All right. So that's what we like to see, is like, we like to be able to do analysis into that blockchain. There's also layer twos that like will support layer one scaling. So like it'll move some of the transactions to a layer two solution to be able to scale that blockchain. Like Ethereum only does 12 transactions per second. That's why we've seen all these other layer twos like Polygon come out, where they can allow Ethereum to actually scale, because we've had a huge issue with congestion on the blockchain, because there was a massive amount of users that came on the chain. But meanwhile, it was built 7 years ago. So it's got old tech, but new users. So there's that's what really layer two is. It's just a scaling solution for layer ones. But we like to invest into layer ones, because typically if you look in this isn't just my opinion, if you go look in the top 30 by market cap, the vast majority of all those are layer one blockchains. Yep. Actually, pretty much every single coin in the top 10 is a layer one, except for the stable coins. So pretty much everything that has like tens of billions of dollars in it are layer ones. So that's also like, we just like to go where the money's at. And if you can pick up an early stage layer one, like there's a few coming out, and a lot of them are VC funded, like Sui and Aptos. And, you know, if you can't get in on some of those rounds to invest in some of those, you can also, you know, there's another chain I really like called Caspa. There was a no pre-mine that's like a 50 million market cap. But like looking at certain blockchains that are like earlier stage, if you can get in on a layer one early on, it can be a really big deal. And then even if you don't, right, let's say they're all VC funded. Another thing we like to do is like do analysis into that blockchain. Okay, we think, okay, it's already at a 30 billion market cap. Maybe we don't take a massive position in it. But what we do is we do research into those applications being built, and then we'll make, you know, investments into some of the tokens built on top of those blockchains. So doing a deep dive into the ecosystem and saying, hey, what projects do we see coming out that'll be, you know, fundamental in growing the developer activity, the number of users, all those things that has an actual, you know, use case inside of that ecosystem. So then you can do deep dives inside of those layer ones to be able to pick, you know, other projects inside of the ecosystem. So yeah, the layer one is just simply a blockchain where people can come build things on top of them.
Yeah. So the underlying fabric. So if you think about so those of us that are old enough, see what I did there. So those of us that are old enough to remember when the internet was being built, think of it like there's the actual structure of the internet being built, and investing in the underlying fabric that's driving that, or investing in different companies that are built on top of the internet, like Amazon. I mean, that'd be a great deal too. But what Jeff's saying is, hey, we invest in the underlying fabric that everything else is being built on. And we feel like that's the safest way to not only cover your downside, but also to amplify your upside. Is that fair?
Exactly. Yep. I love that.
Awesome. So as we wrap things up, is there anything else you'd like our fans to know, like how to contact you, you know, where to find you, what to follow? I mean, you're everywhere, man. So anything else you'd like our listeners to understand before we wrap things up?
Yeah, I spend a fair amount of time on free content as well. So very similar to Ryan, I actually don't have a podcast, but I do have a YouTube channel. I share a lot of my life on Instagram as well. I'm pretty active on Twitter too. So really any three of those. I'm on TikTok as well. We chop up a lot of the speaking engagements I go to and post them on there. So any of those platforms, they're all at Jeff Sekinger, which is JEFF SEKINGER. So you can find me there. Feel free to shoot me a message. We do our best to provide value in the DMs as well. So I really appreciate you having me on, Ryan, and hope your listeners got some value.
Yeah, no, that's absolutely awesome, man. So you got 0%.com. Just follow you, just search your name, and they'll be able to find you since you're on pretty much every platform. And now, I mean, I know you do podcasts, you don't have one, but you're certainly here too. So, yeah. You know, so as we wrap things up, you know, closing remarks is if you're following Jeff, learn to tell an honest story. In fact, showing those vulnerabilities allows you to connect with people. In fact, in Jeff's case, it actually did better for his business. Share your successes. You're doing wonderful things that are really hard that other people may be too afraid. You can put that banner out there and draw people into your vision just by sharing your success story. That helps to boost your reputation and your relationships. And then explore crypto team, utility, coin metrics, and adoption. You do these things and you too will be well on your way in your pursuit of making billions.
Wow, what a show. I hope you enjoyed this episode as much as I did. Now, if you haven't done so already, be sure to leave a comment and review on new ideas and guests you want me to bring on for future episodes. Plus, why don't you head over to YouTube and see extra takes while you get to know our guests even better. And make sure to come back for our next episode where we dive even deeper into the people, the process, and the perspectives of both investors and founders. Until then, my friends, stay hungry, focus on your goals, and keep grinding towards your dream of making billions.